Good morning, ladies and gentlemen, Excellencies, participants in the Financing for Development Forum. It's my honor and pleasure to welcome you here to this event on investing in micro, small and medium-sized enterprises for achieving the SDGs, an event associated with the ECOSOC Financing for Development Forum taking place this week here at the UN in New York. Thank you so much for joining us at this very early hour by New York standards anyway. My name is Rivka Jappi. I am the representative of the International Trade Center here in New York. ITC is the joint agency of the UN and the World Trade Organization, and our job really is about connecting micro, small and medium-sized enterprises to international markets. So we're very excited to be joined by a panel of distinguished speakers to talk about this very important topic, particularly focusing on the issue of around financing the MSMEs to achieve this ambitious agenda 2030 to eradicate poverty and leave no one behind. So I'll be your moderator today, and I will introduce the rest of the panel in a few minutes. But before I do, I would like to hand over to my dear colleague from Geneva, the Director of Market Development and the Chief Economist of the International Trade Center, Ms. Marianne Jansen, to give us a bit of an introduction to this topic, and then we will find out who else we have on this distinguished panel. Thank you very much. Over to you, Marianne.
Thank you. Thank you very much. Thank you for having me here, and thanks to all of you to be here at these early hours, as Rivka said. Very pleased to speak at the beginning of this panel on a topic that is very close to the heart of the International Trade Center. All of our work is around small and medium-sized enterprises. We work on making trade happen by helping small and medium-sized enterprises to take advantage from open borders, to start exporting and importing. So we deal with trade, with what you call the real economy. And one of your questions may be, why are we here talking about finance? Now, the simple reason for this is that we have realized that when we work with export-ready companies, these are also the companies that are often most interesting for investors. Export readiness and investment readiness are closely linked, and that's why I'm very pleased to be here to talk about this topic today. Very happy to co-organize this with 3 countries, the Philippines, South Africa, and Argentina, all countries that ITC works with a lot. And I'm not surprised that, it shouldn't be surprising to anybody that countries are interested in this topic of small and medium-sized enterprises. They represent more than 90% of all companies in any country. They employ 70, 80, 90% of the workforce. So if you want to touch the livelihoods of your country, of your people, then you will probably have to work through SMEs, because you will have to work through them to meet most of the households in your country. I want to start my intervention, however, by making reference to another co-organizer, the International Chamber of Commerce, to Andrew. I'm particularly pleased to be here with Andrew today, and that's because of where and how I met Andrew. Now, it is now not going to become spicy and deviating from the topic. I met Andrew in the Business 20 context. The B20 is a grouping of business representatives that meets in parallel to the G20, the Government 20 meetings. So there is every year business from the 20 biggest countries, economically biggest countries in the world meeting and talking about what are the biggest problems for business, what can be done to help business work better. And guess what is every single year one of the main topics that is being discussed in the B20 meetings? It's access to finance. It's repeatedly highlighted as the biggest bottleneck for business to do business. So access to finance, huge problem. But remember that I said these are meetings of business from the 20 biggest economies in the world. That includes the United States, that includes my home country, Germany, It includes a number of emerging economies, but it doesn't include LDCs. It doesn't include most of the poor countries in this world. So there's business from the richer countries in the world talking to each other, and from the countries where the financial system is working quite well. And in those countries, business doesn't have access to finance. So if that's a problem we don't manage to solve, then it seems to be a bit far-fetched to expect that we will be able to bring money, finance, to SMEs in the developing world. And yet, that's apparently what we are trying to do in the UN context. So I would like to start this discussion by asking ourselves, how realistic is it what we are trying to do if we do not manage to do it in the industrialized world? I wouldn't be here if I didn't think that we should work towards this and that we should attempt it, because, as I already said before, if we want to meet the Sustainable Development Goals, we probably have to work through SMEs. If you help SMEs become stronger, they can offer more jobs, but above all, better jobs. Many SMEs are not able to offer decent pay or decent working conditions. Make them stronger, better jobs. If you help women-owned SMEs, you will contribute to our gender objectives. If you help companies run by young, which is often the case in the developing world, you help to meet our youth objectives. If you help SMEs active in environmental sectors, producing in an environmentally friendly way, you help to meet our environmental objectives. Many objectives of the SDGs can be met through the private sector and through the small and medium-sized enterprises. So I'm not surprised that the UN has, I think yesterday, launched an initiative around global investors for sustainable development. I think that the potential for doing good through SMEs, through the private sector, with the help of investment, is entirely recognized. But if it already doesn't work in the rich world, what has to be overcome in order to channel money to SMEs in the developing world? There are two types of risks that are bigger in the developing world than if you want to invest in SMEs in the rich world. Many developing countries are perceived as more risky because less stable for different reasons. And then there are these SMEs in the developing world. Now, in the rich world already, you don't know, you find small companies more risky. But if, imagine a German investor, I'm talking about my own country, wanting to invest in South Africa, that investor has no clue about what a South African company looks like. So the perceived risk of a small and medium enterprise, that's already risky, but it's one in a developing country, it's amplified, it's even bigger. So we are in a situation where we want to do something that is highly desirable from the point of view of SDGs, but that is very difficult, very complex. I would say a few words about what ITC does in this context. We understand that if you want to bring more funding, more finance into the developing world, the relevant countries have to work on their macro variables. And that's a very standard kind of thing. Many agencies work in this direction. That's not our focus. As I mentioned, we work with the companies. We work at the micro level. If you want to attract investment to your country, you have to get your macro essentials right. You have to get your investment processes right. You have to be transparent. You have to make it easy to bring money into the country. That's notably being discussed at the WTO in the context of the investment facilitation discussions. It's something we look into, we work on, but it's not the focus of our work. If you want to bring money to the SMEs in your country, you have to get your macro criteria right, you have to get your investment processes right, but you have to make your companies visible to investors abroad. And I invite you to look at the investment profiles of the investment promotion agencies in your countries, at the investment profiles produced by banks, investors around the world. You will find information on on the macro balance, on the macro characteristics, doing business, exchange rate, GDP per capita. You will find information on investment processes. You may find one or two anecdotes, case studies on companies, no hard data on the SMEs in the developing world. So if there's one thing that is the case, it's that SMEs from the developing world are not even visible. How do you want to channel money into something that isn't visible? That's the first step we have to overcome. Once you're visible, you look attractive, then you have to convince your investor that you're also creditworthy. ITC sees its role, its potential role very much in the space of helping developing countries, emerging economies, but also partners in the industrialized world to make their SMEs visible. Our firm-level intelligence that we have collected around our export readiness work is also, we realize, very useful for investors. We're increasingly working with investors and showing, making companies visible to them. And we very much look forward to discussing with our partners here today how we can do more of this, how we can work differently together. And in order to do this well, we also look forward to learning from each other. I think we have a fantastic combination of panelists here because we have the real economies, the exporters, represented by Andrew. We have the actors active in the financial sector, in investment, Alberto and Gulbakor, and we have policymakers with us. I think it's these three players who have to talk to each other and understand each other in order to make this highly desirable but very difficult thing happen, in order to meet the challenge to bring investment into small and medium-sized enterprises in order to achieve the SDGs.
Thank you, Marion, for really putting together a very compelling argument as to why it is important to invest in MSMEs to achieve the SDGs, and for setting the scene as to why we're here and why we have the partners that we have around the table. So with that, actually, I would like to give a quick introduction so that you as the audience know who we will be hearing from today. As Marion has said, we will start first, though, with a view from the United Nations. We have with us Mr. Elliot Harris, who is Assistant Secretary General at UNDESA, the Department for Economic and Social Affairs, and is Chief Economist for the United Nations. So we're very honored to have you with us. Elliot, thanks for joining us. And then we will look from the country perspective. We have with us our co-hosts for this event. We have with us Ambassador and Permanent Representative of Argentina, Mr. Martin García Moritán, who will share with us the Argentine perspective. Argentina has also been very instrumental working with to raise the importance of MSMEs at the UN in general by establishing an MSME Day. So we look forward to hearing from him. After that, we will then hear from Mr. Thabo Molefe, who is the Deputy Permanent Representative of the Republic of South Africa, also a co-host. The mission of South Africa to the UN is a co-host for this event. To share us South Africa's perspective on how they are creating the policy environment for investment in MSMEs. And then another big friend of MSMEs is the Philippines. And we're lucky to have with us from Capital, actually, Ms. Maria Edita Tan, who is the Assistant Secretary of the Department of Finance in the Philippines. So really diverse perspectives on supporting MSMEs in these countries. And in supporting investment in MSMEs. We then shift perspective to look at the companies themselves and investment and the investment perspective. We'll be hearing from Ms. Gulbakor Mahkamova, the chair of the board of directors of the National Association of Businesswomen of Tajikistan. So we shift then to Central Asia and Eastern Europe. And then also with us, from the pure investment perspective, the Director of Portfolio of Acumen, Mr. Alberto Gomez Obregon. We're also very happy to have you with us here today. We'll then open the floor up for a lively debate. So you'll be, we ask you to keep your questions ready for the panelists. And then from the organization that represents the companies themselves here at the United Nations, the International Chamber of Commerce, we will hear from Mr. Andrew Wilson, who is the permanent observer at the UN. So I'm really looking forward to this debate. And without further ado, I'm going to hand over to Elliot Harris to kick us off.
I'm going to start my remarks with a little anecdote from my ancient history. When I first started out as an economist, this was with the IMF, I was sent on mission to Togo. And we were in discussions at the central bank about interest rate policy. Now, Togo doesn't have an exchange rate, it's part of a monetary union, so interest rate policy is critical to the way they run monetary policy. And one of the interlocutors was saying, well, this doesn't really work very well here, because we don't have companies that are in the formal banking sector per se where the interest rates would make a difference. And I didn't quite understand what she meant. She said, come with me. And she said, on a Saturday, wear regular clothes. And she took me into the market to the cloth ladies, as she called them. And these are the ladies, market ladies, who run the import and the sale of printed cotton cloth, which it's a major, major industry. And these designs, they make the designs here. They in Togo, they go up to, in this case, it is Holland, to Amsterdam, where they have the cloth manufactured. So they understand perfectly well the issues of exchange rates and the competitiveness and transport costs. They are functioning entrepreneurs, but they finance themselves by what they call the tontine, which is they all come together and put some money into a pot, and the pot circulates, and there are 30 of them together, and you get the pot every 30th week. And I remember asking my friend from the central bank, well, why do they do it this way? And she said, well, they're not formal enterprises. They can't be part of the banking system. And I thought that was sort of if you will, one of those things that you don't learn in a university. But it's the reality of economic life on the ground in developing countries. And what you said, Marion, is absolutely right. If we want to have any chance of actually realizing the reducing poverty goal, or leaving no one behind goal, or goal 8, or goal 9, we have to take into account the fact that the structure of economies is not all large enterprises that obey market rules, but a whole string of small enterprises that do obey market rules, but we don't see them that way. Now, that, I think, is one of the most important characteristics that we have to look at, is this issue of size and potentially also informality. Because, Marion, when you speak about the lack of visibility, much of that will come from the fact that if you're operating as an informal enterprise, you're not registered in the enterprise registry, you may not be known to the tax people, you certainly are not known to the banking community, because you may not have any sort of relationship with the local banking community, and you most assuredly are not known outside of your community or your country. Now, that is a very, very difficult thing to overcome, and I think that that is one of the major impediments to mobilizing finance at scale. But the second thing that I think is really important is the question of size. I spend a lot of my time actually talking to the financial industry, and the interest in investing in sustainable projects is growing. And we see it here at the investment fair upstairs. But one of the things you keep hearing is that there's a lot that goes into making an investment, and beyond or below a certain size, the costs of preparing that investment do tend to become quite prohibitive. And I've sort of started saying it's impossible to invest the $7 trillion that we know we need every year, $100,000 at a time. Who has the time? You can't go out there and do that kind of due diligence. And so that's one of the impediments of financing the small and the medium-scale enterprises, that they are also quite small. And so you either have investors dedicated to financing small-scale activity, or you have to find a way to bridge the gap between the larger investment flow and the smaller scale retail investment demand. And a part of that problem lies in the fact that any investment, large or small, is going to have to be into a project that can demonstrate the return. And what I've seen in sort of the career that I've had out on the ground in developing countries is that if you are not part of a formal banking system, and if you're not used to preparing projects to be financed by third parties at an arm's length, then it's very hard for you to prepare any kind of investment project to be financed by anybody, far less by some foreign investor. And that, I think, points to one of the biggest impediments that we will face in financing the SDGs. We know that it cannot be done by governments. There isn't that much public money in the world. It has to be done by the private sector. If it is going to be done by the private sector, it has to be done on the basis of a project that demonstrates a return on the investment. And if that project is not formulated with the information that the investment needs, the investor needs, the money will not flow. And so that is perhaps one of the biggest challenges that we face in getting the flow of financing into small and medium-scale enterprises. So it is that they have to present what they want the project to look like in a way that the investor can deal with. Now, I don't think this is rocket science, but one has to know what information is needed, and one has to be able to present that information in this way. So that would be, I think, the first of the requirements. The second of the requirements is this question of visibility. I think, Marion, what you say and what the ITC does in bringing information into circulation about what is out there and what the smaller enterprises are doing is really important. I mean, we can know about the existence of the market ladies, but how they operate, the cloth ladies in the Lomé market, but how they operate, we have no idea unless we're actually out there talking to them. What are the circuits? What are the relationships that they have? Where do they get the cloth from? At what rate? And how often do they go and make these kinds of design changes? All of that is part of the information that an investor is going to want to have. It's not necessarily the case that in each investment proposal you have to put all that information there, and you wouldn't have to if the information were available somewhere else. The work that you do with your registry is extremely important, and that has to be a part of the solution. So that's the second, it's the information. I think you spoke as well to the question of the overall environment and the perception of risk associated with that. I think that too is something that is not the challenge for the individual small enterprise, it's the challenge for the country in which the enterprise operates to make sure that there's clarity about the direction of policy, the predictability of the regulatory framework, and an understanding that, well, the legal system works not in favor of business, but doesn't work against business either. It's neutral, and contracts can be enforced. I mean, all of this is stuff that we talk about all the time, but the slightest little deficiency there becomes debilitating if we're talking about a small, informal enterprise. It literally shuts everything down. But then the question of scale. Now, no matter how you turn and twist, scale is going to be important. A small enterprise run by one person with 5 or 6 employees is not going to be able to manage a massive amount of money. It just won't happen. And they don't need a massive amount of money. And yet you have this discrepancy between the large amounts that want to flow out and the small amounts that are actually needed in the individual case. And what I think has to happen is there has to be a sort of a bundling. There has to be some mechanism that brings together different small-scale projects into what I can only call an investment vehicle. Now, that sounds all very dispassionate, but it essentially means that you can't expect the big investor to go and do due diligence in 50 or 60 different projects. But if you could present to the investor an opportunity to invest where they only have to make one decision and then somebody somewhere else is distributing that investment among the individual recipients, that might be a model that could work much more effectively. We've tried that in Indonesia, and I'm going to do some absolutely shameless advertising here. It's called the Tropical Landscape Financing Facility, and it does exactly that. You have a whole series of small-scale projects in the area of landscape management and renewable energy. You have an asset manager who bundles together 100 of these projects till the value of that bundle is $10 million. And then you have a big international bank that provides money in tranches of $10 million, understanding that the asset manager is going to be distributing the money and overseeing the actual project implementation. That's in very simple terms. The big investor gets the investment, a $10 million at a time investment. They get a return. The small-scale investor, the small-scale enterprise gets their $50,000 or $100,000 without having to interface with the big investor. I think we need that more than anything else. And I suspect that for us to be seeing success in the financing of SMEs, we're going to need a very dedicated function of investment facilitator, someone who brings together all of these projects bundles them into an investable vehicle, someone who also provides the market information. What are these companies doing? What is their niche? Who are their clients? How well have they been doing? How big are they? And we need someone who can also communicate to the investor, especially the foreign investor, the necessary information that will allow a proper assessment of the risk of that investment, independent of the individual enterprise we're talking about. Whether that needs to be a specialized function, a special profession, or whether that can be done by the local Chamber of Commerce, I don't know. It may differ from case to case. But I think the function is important because individually, the small-scale enterprise, who has the time? I'll stop there. Thank you.
Thank you, Elliot. Lots of food for thought there for new initiatives and also where the challenges actually lie on the ground. So why don't we shift focus then and look at what countries themselves have seen as the challenges and the opportunities in their countries and how they are creating a policy environment and building the institutions necessary to encourage investment in MSMEs. Let's start with Argentina. Ambassador Moritan, García Moritan, you have the floor.
Thank you very much, and I'm very happy to join this panel with Elliot and Marion. Really, I appreciate very much, and of course, Philippines and my colleague from the South Africa. So, we all know that even though there is a wide acknowledgement of the medium and small enterprises' importance to national economies, and they yet face already identified roadblocks such as informality, low productivity, and scarce access to finance that need to be addressed with a fresh impetus. When Argentina, with the support of the International Council for Small Business, decided to establish the MSMEs Day at the UN, our idea was to raise awareness about these difficulties, but also to showcase the importance of these enterprises in the achievement of the 2030 Agenda. MSMEs, creation and growth are closely linked to macroeconomic conditions. That is why these enterprises have been mentioned in every G20 leaders' declaration since 2013. Even in most of the time it is only a sentence related to access to finance and technology, the importance of being included in these declarations is a reflection of their role in national and international economies. In that context, the Business 20 Engagement Group, B20, has been working actively in raising awareness on these difficulties faced by MSMEs and making recommendations on how to overcome them. During the Argentine presidency of the G20 last year, this engagement group highlighted the importance of entrepreneurship for MSMEs, so it recommends governments to aim at promoting entrepreneurship skills through education and training, broadening the funding alternatives and financial assistance, and introducing special entrepreneurship programs that may, for instance, temporarily reduce tax burden. The B20 also encouraged the development of clusters and innovation networks to provide MSMEs with an alternative way of sharing knowledge and best practices. Cooperation between different stakeholders can improve MSMEs' productivity, competitiveness, and foster innovation. But also, we must not forget that institutional and regulatory settings are fundamental to ensure that all business are able to compete. Since complex regulatory frameworks have bigger impact in small enterprises than larger business, tailored policies that advance regulation simplification schemes should also be implemented. In the case of Argentina, up until approval of a new entrepreneur and MSME law in 2017, the process of incorporating a company, registering with a tax agency, and opening a bank account took for 2 or 3 months, up to a year or more, depending on the province. With the new law, a company can be established and registered in 24 hours. This is a federal law that needs to be adapted to each subnational entity. So the national government is currently working in helping provinces to introduce this. Finally, I would like to point out that since MSMEs are often most vulnerable link in national economies, financial inclusion should be at the center of any MSME's policy. While the bank lending is the most common source of external financing for these enterprises, other forms of funding should be considered, like public-private investment or crowdfunding. In addition, enhancing financial literacy of MSMEs, simplifying capital market procedures, and lowering the accessibility cost structure, especially for the unbanked. That is key. Argentina is not an exemption to this situation, which is aggravated by the issue of a low credit stock to financial private sector activities and the small capital market available for MSMEs. That is why the government is taking initiatives to correct these deficiencies of the system. The Ministry of Production has programs aimed at the promotion of financial inclusion. Public banks have launched lines of credit aimed at reducing costs and extending financing terms, and other lines with simplified processes for pre-qualifying MSMEs. Along with this set of tools and resources, it is necessary to have efficient institutions that provide certainty regarding the criteria and deadlines. It is essential to carry out a strong job of dissemination, advice, assistance, and support of micro, small, and medium enterprises. Through the work of the public sector in coordination with sectoral and regional chambers, work must be done to give visibility to the available instruments and design others that allow fostering production and generating more and better jobs. Thank you.
Thank you very much, Ambassador Garcia Moretan. What struck me was not only have you been able to share with us some really exciting work happening in Argentina, but also how Argentina is elevating this discussion to an international level at the G20, at the B20, and also at the UN. Because, as Marian has said in the opening, these challenges similarly are faced in countries, all types of countries around the world, and MSMEs are the backbone of all of these countries. Now to hand over to DPR Molefe from South Africa to share with us a little bit of the South African experience also.
Thank you very much, Madam Moderator. Good morning, colleagues. Good morning, panel and distinguished guests. We are honored to take part in this very important event this morning. It is without doubt that micro, small, and medium-sized enterprises are arguably the largest employer of people in many developing countries. Yet their viability is threatened by lack of access to such risk management tools as savings, insurance, and credit. Access to financial services can undoubtedly boost job creation, raise income, reduce vulnerability, and increase investment in human capital. MSMEs can contribute to achieving the SDGs, but achieving any of the goals require private sector work in partnership with the public sector in ensuring that right policies are in place for the private sector to fulfill its potential as a driver of sustainable change. Madam Moderator, South Africa recognized the importance of the MSME's business activity, which led the establishment of the new Ministry of Small Business Development in order to facilitate promotion and development of small businesses. With success, the government started to expand our small businesses incubation program with an objective to provide potential entrepreneurs with physical space, infrastructure, and shared services, access to specialized knowledge, market linkage, training in use of new technology, and access to finance. An initiative like this provides a most needed entrepreneurial services to the MSMEs in rural areas and township, but more especially to young people who want to start their businesses. MSMEs are the backbone of every economy, but they continue to face enormous disadvantages when competing with large companies. It is therefore essential to design appropriate policies that are directed at reducing these disadvantages. There's the need to create an enabling environment in order for them to flourish. This will include, but not limited to, regulatory environment, enterprises culture, financial environment, and financial support for the sector. Communicating clearly and effectively when setting these conditions should be greatly ease the implementation of specific policies and regulations when it's decided upon. The regulatory environment has profound effect on private sector development, influencing whether individuals choose to start a business, what kind of a business to operate, and in which sector and market to operate. The lack of specific rules and of engagement creates a harsh economic environment, making most MSMEs to fail within the first year of startup, as they are bound by the same policies and regulations that applies to the large corporations. As the results, many developing countries' MSMEs policies have not been as effective as they were intended. As South Africa, we aim to reach a point where there are less challenges about collecting and digitizing more accurate, comprehensive data on our respective MSMEs. Relying heavily on proxy indicators to measure our MSMEs' activities and understand their need has its own disadvantages. Madam Moderator, access to finance is frequently identified as the critical barrier for the growth of the MSMEs. There is a need for financial inclusion of small entrepreneurs without whom most developing countries will struggle to develop. If well-resourced and supported, the MSMEs can create opportunities in our countries for a sustainable economic growth and development. In order to address some of the challenges, both the private and public sector should have a better insight about the magnitude and nature of the finance gap SMEs faces. Women and youth entrepreneurs need to be empowered in order for them to pursue economic opportunities, invest additional capital, hire more employees, and grow their businesses. In this regard, a particular focus should be given to address the extent of which women are less able to access finance. It is clear that enabling environment of MSMEs will require more coordinated approach. That being said, it's also important to know that some of these financing gaps are caused by a combination of supply and demand side issues, ranging from microeconomic conditions to the lack of SMEs expertise and the banks to negative perception among the SMEs on borrowing. In conclusion, Madam Moderator, we are of the view that vibrant and growing MSMEs market is fundamental to achieve long-term economic growth and to create sustainable work opportunities. It's worth to reiterate that having good understanding of the size, growth, and composition of the market is therefore critical to the design of relevant policies. There is a research that suggests that there is a startup capital finance gap in many developing countries that constitute a barrier of entrepreneurship. It is regrettable that in many developing countries, especially in African continent, the issue of startup finance for the entrepreneurship has not been adequately researched. MSMEs are here to stay and need support from all of us to flourish. There is a space for countries to do their part in bringing about the right policies that encourage entrepreneurship and the development of MSMEs, including enabling global environment necessary in making this segment of the economy to be sustainable. Thank you very much, Madam.
Thank you, DPR, and thank you very much also for raising the issues of the diversity within the group of MSMEs, the challenges particularly faced by women entrepreneurs as well, and the importance of partnerships too. I would now like to hand over to Ms. Maria Edita Tan, who is the Assistant Secretary for the Department of Finance in the Philippines, to share with us her perspective as well.
Thank you, Madam Chair. Well, let me start off with the what's the lay in the land, no? In the case of the Philippines, you're correct, 99.56% of all registered businesses are actually MSMEs. And 62% of the jobs are actually created through them. 25% of our export revenues are actually coming from the MSME. So it's really a very important, they play a very important role in the economy. So, but if you look at them, they are actually facing a lot of challenges. Well, the most critical is actually I agree, it's actually access to credit. And then they also lack skilled labor, outdated technology. This is in the case of the Philippines. The ease of doing business, regulatory framework, and then the startup support. And of course also the right infrastructure. So if I, let me then go into what have we been doing in the case of the Department of Finance. Acknowledging the challenges of the MSMEs, we said that probably we could help them out in how to access credit and how to graduate them from the informal lending sector to the formal lending sector. And now how can we do that? So right now, for them to have access, they need to have collateral. But they have very limited collateral that is actually acceptable to the formal lending sector. In the case of the banks, they always would demand for land and real estate. But if you look at the capital stocks of the MSMEs, land and real estate would just be about 20%. So there's that huge gap. And how can they access? How can they access formal financing if they don't have this collateral? And how can they bring down the cost of a credit? No? So looking at it, right now government is looking at the structural impediments, like we don't have a national ID system, we have limited available agricultural finance, low penetration of microinsurance and shallow financial literacy, fragmented financial infrastructure which covers underdeveloped payment system, lack of comprehensive credit and collateral data, and lack of alternative credit enhancement mechanisms. We also have limited capacity of financial institutions out there, the lack of resources or ability to innovate, no cost-effective credit assessment or enhancement mechanisms, and thirdly, inadequate financial and operational capacity. So, given this, starting 2014, 2015, government actively looked into the issues, and we were looking at probably there is a need first to update our own laws. Our laws are really like 100 years old, and the law doesn't look good, doesn't allow for movable assets as collateral. So last year, we actually passed a law that allows this. That's the Personal Property Security Act. And this actually could be a very good tool for the MSMEs. So that's one. Let me see. So we've also we also adopted a reform on Philippines' secure transactions, which was initiated by the Department of Finance, along with the National Credit Council and with the help also of the International Finance Corporation of World Bank. And we also are coordinating with the Land Registration Authority. The objectives of said reform are to really strengthen the secure transactions legal framework in the Philippines, broaden the utilization of movable assets as collateral for MSMEs, for MSME loans, and provision of web-based centralized registry, and harmonize the Philippine chattel mortgage law and other related law on secured transactions. So, under this PSPA, or the Personal Property Security Act, they are now allowing accounts receivables, warehouse receipts, inventory and raw goods, intellectual property, bank accounts, industrial and agricultural equipment, durable goods, agricultural products, and vehicles as possible collateral. The law creates a centralized and nationwide electronic registry established in the Land Registration Authority, where notice of a security interest and a lien in personal property may be registered. So the law will result for MSMEs to reduce risk to credit by financial institution, lower the borrowing costs, increase MSMEs' access to least cost finance, and improve productivity with a wider access to finance. In addition, MSMEs will start to resort to formal lending institutions than to the risky and unsecured 5-6. We call it 5-6. The meaning of 5-6 is actually you borrow 5,000 and in a month's time you have to pay back 6,000. That is actually in effect 20% interest rate per month. That's huge, no? So they will also have a protection against abusive debtors' behavior, as they will have the right to file a case. So the law, on the other hand, will allow investors to be more receptive to use or consider movable assets as collateral, given that the bill has clear protection for the investor in case the loan goes bad. So in tandem, we're also submitting a warehouse receipts bill to update the existing warehouse receipts law. And this will provide security interest in commodities covered by warehouse receipts may be created, perfected, and enforced in accordance with the PPSA, or the Personal Property Security Act. With this, it seeks to provide an online registry system where all warehouse receipts can be registered and accessed. There are other initiatives, but now going back to the other challenges. Short. So the other challenges, you have lack of skilled labor, and we have TESTA, the Technical Education and Technical Education and Skills Development Authority that could tackle that. And then we also have ease of doing business that's being also handled by a group, or even ourselves, we are streamlining the processes. And in the case of the Department of Trade and Industry, they're providing this Go Negosyo. And here they are providing technology transfer, production and management training, and marketing assistance. Further, they're also establishing the Philippine Business Registry Data Bank. So everybody who's MSMEs, they get to register their business. So they also provide startup fund, and on top of that, it also doubles up as a scale-up fund, so which is very important. And then they also provide access to market linkages. I think that's it, Madam Chair. Thank you.
Thank you very much, Ms. Tan, for sharing with us some really innovative approaches that the Philippines is implementing. I mean, we've heard a lot about this wealth of ideas and innovation that comes from MSMEs as the backbone of most economies, and then this mismatch where you've got this pool of investment which is not finding the projects of these MSMEs, and this need to bridge the gap. And the theme that I've heard come up so often is the area of risk and the area of needing to build trust. How do you build trust? How do you build confidence? And Argentina, South Africa, and Philippines have given us some concrete examples of how you are addressing this. So let's now go to the other side of the table and hear from investors and from companies on how they perceive the issue of risk. And I'm going to start with Ms. Gulbakor Makamova, who, besides being the chair of the board of directors of the National Association of Businesswomen of Tajikistan, is also very heavily involved in issues of access to and financial inclusion. So we're very happy to have you with us here today. So perhaps you can share with us your perspectives of this issue of perceived risk of MSMEs and how to address this so we can actually increase investment in MSMEs for sustainable development.
Thank you very much. Good morning, dear participants, speakers, and organizers. I represent the National Association of Businesswomen of Tajikistan. It's a member-based organization. We uniting more than 3,500 women businesses and women artisans. We help women-led SMEs to grow and develop. I am well aware of the problem of financing small and medium-sized businesses from provider side. For many years, I managed one of the largest financial institutions in Tajikistan, Imon International. And I also know the problem from demand side. I have created and developed 5 private enterprises. So, how do we channel investment to SMEs? How can we bring investors from developed countries to developing and transitional countries with a low revenue level and underdeveloped private sector, such as Tajikistan, for example? My goal here on this momentous occasion to describe examples of efficient investment into business model aimed at achieving the SDGs in Tajikistan. There are examples of projects that have been implemented with blended finance, where risk for lenders are underpinned with a guarantee mechanism, where commercial lending and investment are coupled with subsidized options and grants. In our countries, development issues and perception of risk often prevent investment on purely commercial terms. That's why blended model allows the private sector to balance risk against rewards. Blended finance investment solution capitalized on partnership among diverse actors, including international organizations, development cooperation agencies, business associations, and private enterprise. There are incentives for financial institutions to boost their lending to the SME segment or to the women segment and support capacity building among financial institutions and borrowers, SME borrowers and women borrowers. In Tajikistan, we have worked with small women farmers, USAID, and credit organizations to set up high-quality strawberry growing. During the setup phase, women were supported with seed capital and technical advice, and now they are using commercial loans to expand. Also, National Association of Businesswomen uses grant funding to conducting trainings and study tours for women owned of small and medium enterprises. Then, MDO Imon International, a local commercial microcredit organization funded by several impact investors, offers loans on the market term for startup and expansion of women-owned businesses. The risks are balanced with the greatest cost of SMEs capacity building being covered by National Association of Businesswomen using grant funding. Or it's another example. Ozara LLC is a local commercial company engaged in production and marketing of handicrafts product. It unites more than 350 artisans, providing inputs and helping sell their products in domestic and export markets. With Ozara, blended finance has been used to develop new and unproven markets, prove the viability of new markets and new business models to other investors, and multiply impact outcomes. It's helped to lessen the gap between real and perceived risk and to create right risk entry point for private capital. Ozara have been trying to implement online sale for many years, but it's still impossible due to the underdeveloped electronic fund transfer system and absence of e-cash mechanism and completely inefficient logistics system in the country. Visa, MasterCard, PayPal, Apple Pay, everything that we take advantage of in US on daily basis, these things are not available to businesses in Tajikistan and hold back their development. The implementation of mechanism requires a large-scale project, developing electronic fund transfers and e-cash, getting the government actively involved, and allowing the country to integrate into global commodity and financial markets. There are another example of mixed financing project with several actors playing different roles. The European Union initiated enhanced competitiveness of Tajik agribusiness program with the aim of developing agricultural sector in Tajikistan. ECTAP. ECTAP project works to assist in poverty reduction and promote economic growth by optimizing agricultural production and value chain in Tajikistan. Money is split between loans to Tajik agribusiness either through the credit providers or directly. It's grant component for purchase of equipment and covering some of risks and technical assistance. The project is highly efficient in addressing the issue of agricultural modernization and reducing environmental impact. If the type of equipment purchased was in compliance with the program requirement, the loan was accompanied by a grant covering up to 20% of the equipment cost. There are specific examples of what we have achieved in Tajikistan. Looking to the future, we need to build local and regional groups to strengthen local institutions and banks. Without local participation, the long-term success of any initiatives, especially in the field of SME financing, cannot be assured. It's recommended that capacity building and engagement of local banks while building new regional institutions that serve the needs of SMEs is a must. Such institutions could become integrated platform or centers for skills, knowledge, and training that would not only impart relevant skills and training to SMEs, but would also help them to identify opportunities in broader markets. We must support democratic processes in the country. Clearly, government needs to establish responsible policies that create an enabling environment for private investors into the sustainable development goals. This means improving political, economic, and financial conditions in the country, reducing the country-specific investment risk, and generally improving the investment climate, and we need support to do this. So you can see, although we know what the problems are, we also already have many of the solutions, but we need to move on from relying on donors and attract more private investors. If there is an appetite for the investor to buy Eurobonds in Tajikistan to invest into the government's hydropower project, why can this be not transferred into the small and medium-sized enterprises? It's easy to market hydropower project, but it's harder to market investment to SMEs. But it's not impossible. Small countries with transitional economies have to be integrated into the global financial market, and blended financing is currently the most efficient model for countries like Tajikistan. We need to advocate, we need to educate, we need to reach out to the private investors and show them what is possible. We should share our success stories, share our contacts, work together to raise awareness among the private investors, and use donors and government to support them when we need to. Thank you for your attention.
Thank you so much, Ms. Makamova, for really throwing down the gauntlet to all the partners around the table, and congratulations to for what you've been able to achieve in Tajikistan with these women entrepreneurs as well. Now, it seems like everyone has been throwing down the gauntlet to the investors, to the investment community as well. And I'd like to then turn attention to Alberto Gomez Obregon, who's Director of Portfolio at Acumen, and also has over 10 years of experience in the area of investment in emerging markets. Maybe you could respond a bit to what you've heard now, but talk to us about the perceived risk of MSME investment and how you at Acumen have been addressing this as well. Thank you.
Good morning, everyone. Thanks for being here so early this morning. I wanted to start with an example of a recent investment that we did in Colombia. Gigante Central Wet Mill is a coffee processing facility that is located in the region of Huila, which is a post-conflict region of Colombia. And companies in these remote locations, with all of the sort of challenges and characteristics that all of my fellow panelists have talked about today, don't have the opportunity to access traditional capital and traditional funding. And in partnership with the Farmer Association and in partnership with a large corporation that provides a steady and stable purchasing of the coffee of this facility, Acumen put in roughly $500,000 with an innovative structure that behaves similar to equity, has sort of the same governance as equity, can add value and influence the direction of the company, but at the same time has a different payout mechanism that doesn't disrupt the enterprise in its need to be sold to a larger buyer. And so how we structured this was you have a large company, corporate, that buys a portion of the coffee that is produced by the processing facility. You have a technical assistance organization that helps the farmers harvest and process better quality coffee. You have Acumen as the investor that established, together with the Farmer Association, a corporation with institutional practices, with corporate governance, with a board of directors, with a professional management team that runs this company as an enterprise, and came in with this innovative structure that will be paid out after 10 years in a more flexible manner than your typical debt facilities. And so we're looking to build this central wet mill for these farmers and provide them a means of sustainable livelihood. We all heard about the role of SMEs in the economies. We all heard about the challenges that they face in terms of perceived risks, in terms of providing returns and liquidity to investors, the complexities of managing a portfolio that is so fragmented. All of that is true. However, we also understand that there is a need to mobilize capital to these institutions. Traditional investors, and even a lot of impact investors in the past, in their search for scale, have primarily invested in companies that we call unicorns. And unicorns are normally companies that are dealing with individuals as customers. Impact investors, like Acumen, we started about 19 years ago. Our initial thesis was, if you treat people in poverty as a consumer, if you give them agency to make the decision around what they want to purchase, and let that be driven by market demand, that will restore their dignity and empower them and provide better quality of livelihood for them. After 19 years of investing, we continue to pursue that strategy, but we've also understood that improving the quality of life of these individuals is not going to get them out of poverty. To get people out of poverty, you need basically two things. You need their income to increase, and you need to provide stability in their income. So a lot of these individuals are directly affected by commodity pricing. They're the last chain in the supply chain with 5, 10 intermediaries in between them and the market. And so how can you, as an investor, provide the type of financing that these other organizations, like farmer associations, like artisan corporations, provide capital that will not scale at the same rate, that will not provide the returns or the access to liquidity for investors as traditional investment has done. And so what we've started to experiment, like we did with Gigante in Colombia, is creativity. And so with creativity comes innovation. Gulbakor talked about blended financing structures. So that is sort of one of the trends that we're seeing in the market around new types of instruments that are more innovative, that provide flexibility to organizations, that don't disrupt them at the time of sale, and also innovation around the funding structures. We believe that the current instruments and vehicles used today in the financial system are not the right ones for these types of corporations. And so there needs to be a shift in how capital is structured, blended finance funds that provide different flexibility to investors to be able to access these corporations, innovative structures that allow you to exit in more creative ways are for us the right approach to access these corporations. And so the new strategy that we're taking on as Acumen is a little bit different in the sense that you can't look at investment as sort of, you're going to put some capital into a standalone entity that's going to provide returns. You have to start looking at it at a portfolio level, focused on ecosystem building and systemic change through your portfolio. with connectors like Hive here to my left, which are incubating and accelerating these types of SMEs, and then give them visibility to investors like us that are coming in with this portfolio approach, using these more flexible and creative structures that will allow us to achieve returns and liquidity without being disruptive to these enterprises, but at the same time helping create institutional, properly governed with professional management team companies that will be able to sustain themselves into the future. Thank you.
Wonderful, thank you. I think at ITC we definitely will agree with this. You can't have transformative change without investing in ecosystems and for that systemic change. But now I'm going to open the floor up to all of you, to the audience. You've heard some very compelling arguments. Do you have any questions for any of our speakers? Well, I'm sure you do. Not all at once. Yes, ma'am, in the my far right corner.
James from UNDP, and our team is preoccupied with filling the missing middle in the 1 to 15 million ticket range, especially for nature-based MSMEs, fishing, forestry, and agriculture. And I'm just curious if I could hear from some of the panelists, what do you see as the merging market or the merging pipeline of investment-ready or also almost investment-ready nature-based MSMEs? And then finally, just a small plug, we are convening a Finance Nature Summit in Edinburgh in May. We've got about 100 people. There's still about room for 20 more. We're bringing investors together as well as pipeline providers and de-riskers, and we'd like to figure out what UNDP could offer in this space. Thank you.
Maybe I could take a round of questions. Since we have about 5 minutes 10 minutes for debate. Any other burning questions? Great. Well, maybe we kick off with that one. Would you like to address that question to anyone in particular? No, I think it's quite open. Pipeline. Perhaps do you want to address that, Alberto?
We don't invest in sort of nature. We're more of a social enterprise focused on poverty alleviation, so I personally don't have much context there. Sorry.
Ms. Tan.
I'm trying to think out of the box here. The Philippines is actually one of the major things that we're into right now is actually tourism, and we're trying to take care of the sites so that's what I'm talking about. When you talk about nature, how to take care of it, and in doing so, it makes it more easy to sell. So right now we're investing in how to clean up. Like in the case of Boracay, I think it was widely publicized. So that for me is an MSMEs as well, because there are a lot of small tourism enterprises there. So it's quite different from what you might have been thinking of, but that's how I see it.
Great. Any other questions? No. Well, I mean, the issue of information gaps came up with a number of the speakers, and I wondered if any one of you would like to drill it down a bit more in terms of what exactly the information, where does the information gap lie, and what particular tools you think are necessary that don't exist right now that would bridge this gap in an ideal world.
From our perspective, I think there's sort of two gaps from an information context. One is, as investors, how can you access these types of enterprises? And so there's sort of, it's not that easy, particularly when you're not operating in the ground. And then the second big one is, when you're investing in these enterprises, how can you access the right amount of information to be able to make an informed and disciplined investment decision and understand the risks and the uncertainties that you're taking on as an investor? From a connector perspective, basically what we've seen, or the ways that investors are solving these issues, are either you're on the ground, and so you're working in the local network, you're sort of maneuvering that environment, and that's the way in which Acumen operates. We have 6 investment offices with local teams in all of the regions of the world where we invest in to be well plugged into those ecosystems. And then the second one is through what I was mentioning about the connectors like Hive, which are incubators, accelerators that go out and support these companies in their early stages of evolution, in some cases with content curriculum development, and in other cases also with sort of small rounds of investment capital to provide them some sustainability. And what investors like us or others, we partner or we establish alliances with these connectors to get access to pipeline, because it's in their interest as well that their companies, once they graduate from these programs, they start having visibility to follow on rounds of capital. And then from the second challenge around, what type of information and how can you access the right amount of information from a due diligence perspective, that one is a little bit more complex, particularly when you're operating or navigating in environments where sort of rule of law or the regulatory framework is, not as stable as the developed economies, or where, there is corruption and you need to understand what types of practices companies could be engaging in. Our approach there has been really twofold. Once again, establishing partnerships with people on the ground that are well plugged in. So even if you're operating outside of the region, always having somebody on the ground that could provide with you sort of the local context, that can establish connections with the individuals in the organizations that you're investing in. I mean, in emerging markets, people everybody knows everybody. And so if you're well plugged in through a partner or through some sort of agreement with an individual and organization that could give you access to that market intelligence, you can be better informed into who you're investing in or what type of corporation you're investing in. And then the second one is really around, and it's a very soft one, but spending as much time as you can with the entrepreneur and the management team. We really put a lot of emphasis on the individual or on the team of individuals that we're investing in. So, if you have a robust sort of mechanism and an assessment framework where you're trying to really understand who this individual is, what values drive them, etc., we have in general found that we're making better investment decisions.
Yes, DPR.
Thank you very much. Just for short intervention from our side. From the South African perspective, the gaps that I think our government have realized is the gaps between the private sector and the public sector. The gaps also within the African continent, of which I think last year there was a trade agreement that was signed at the AU level, of which is one of the integral part that Africa as a whole we wanted to close those gaps. And as you know, Africa have got a lot of rural areas, townships and all, is vast. So you need to create policies also, as we have mentioned in our statement, that also make it easier for somebody even in a village somewhere to access even services of government, even services in the public sector, because the real issue also that we have identified is the financial issue. The big institution that have got financial muscles doesn't want to lend or to borrow you in the village of which you don't have a reputation, you don't have a bank account. Those are the gaps that you have they don't have that confidence in you. Especially now, we are facing with I think is a work in progress from our side. Since the last year, I think our president hold an investment drive. Everywhere he goes, he tries by all means that he attracts investment so that they know about South Africa. Before you even know individuals, you need to know what our country has and what our country can offer. So there is a lot of attraction now, and we can see there are changes. although Africa, is not yet stable, but in some of Africa, we are seeing a lot of changes that people, they start to see. I think one of the speakers talked about the visibility. You need to be visible. So people need to see you, needs to know you, needs to know what you are doing, what can you offer on them. So I think on us, there's a progress going towards that, to close those gaps, the working relationship between all the sectors. Thank you.
Great. Before I hand over to Andrew for closing remarks, I'm going to shamelessly give a plug to the International Trade Center. We were initially established 55 years ago to address gaps in market information. That was our raison d'être right in the beginning. And I know our current SME competitiveness outlook, which is going to be hot off the press very soon, tries to look at this, how to harness the power of MSMEs for the SDGs, and it's addressing particular information gaps. If Marion would like to maybe say one or two sentences about it.
Yeah, no. So I come back to a point I made before. The one thing we realize is that trade, the real economy and the finance economy, that these things are so interlinked. Alberto wouldn't invest give money to companies who cannot produce. We are on the real economy side as ITC, but the information we have on companies, we have been realizing that it is useful also for investors. We work on the ground with national stakeholders, chambers of commerce, for instance, trade promotion, investment promotion agencies, sometimes industrial associations, and collect with them the information that they need to know how to make their companies visible to investors who may be abroad. As you mentioned, we are going to publish some of this when the SME Competitiveness Outlook will be launched. We will have an event here on June 27 in New York with some of the partners that are here today also, and I hope that I will see you all there again.
Thank you, Marion. And I'm going to hand over now to Andrew Wilson from the International Chamber of Commerce. And before I hand over to him, to remind our guests that we will have a light breakfast, coffee, tea, croissants will be served outside the room straight after. So we hope we join you there to continue the discussion. Andrew.
Thank you, Rivka. I now realize I've got about -2 minutes to give my intervention. Plus, I'm standing in your way of coffee and the beautiful UN croissants, so apologies. Not at all, not at all. Look, I just want to go back to what Marion said at the start of the discussion, that we met, I think, 5-6 years ago in the context of the B20, and the discussion really hasn't changed that much in macro terms. So we all recognize SMEs are vitally important. We all recognize there's a huge financing gap. And I think we really need to look at where are the areas of action that we need to prioritize at a macro level, but also at a national and a local level. And I just want to highlight 3 disconnects that I think have been touched on in different ways in the discussion today, where I think there's a real need for international action. The first, and I think this has been the key theme of the discussion this morning, is the disconnect between how financial markets operate and small businesses, and what small businesses really need. And I think this manifests itself in several ways. You have the big investment tendencies of the financial institutions compared with the small financing needs of MSMEs. You have, I think, a pretty fundamental gap in some areas between perceived risks of financing and actual risks on the ground. And that maybe speaks to some of the information problems that were touched on in the panel discussion earlier. I really loved the idea that I think Elliot mentioned earlier about investment facilitation vehicles, and I can't wait to fire off an email to our Paris headquarters to see if there's a role that local chambers can play on the ground in that role. Just one further point I wanted to bring out, which is I think we need to be real that there may be a market concentration problem, certainly in terms of some types of financing. So if you take the trade finance market as an example, you see essentially that 13 banks control 80% of the financing. So my question is there a need for democratization of the market? What can new entrants do? How do we ensure those new entrants can get into the markets? And also, what's the role for fintech in that regard? The second disconnect I just want to touch on very briefly is the very clear disconnect between the public policy objective that we all articulate constantly, and the regulatory objectives that create certain perverse incentives within the system. So, we all agree SMEs are important. We all agree we need to scale SME finance. If you go to the US Congress, it's the one thing Democrats, Republicans, independents can agree on, quite frankly. If you then go talk to regulators about some of the regulatory barriers that I think are well known in relation to financial crime or capital adequacy, you see a very different discussion where regulators will say to you, well, we don't really care about that. We care about managing risks. And I think we need to find a way, a neutral forum, whatever it would be, to bridge that gap and to allow for a proper discussion about what the relative balance is between public policy objectives and controlling regulatory risk. The final thing I want to touch on, and here I'm going completely off script because I may upset many of our major member companies, is what I see as a disconnect between the discussion or the narrative around supply chain sustainability in its broadest possible manifestation and supply chain financing, and particularly the corporate role within that. When we talk to corporates, I think there's still a tendency for people to think about price, quality of goods and service first, and then to look at sustainability through a risk lens, essentially an ESG lens, sometimes on steroids. What I'm not seeing, and I think this is a debate that needs to be had with major corporates sat at the top of big international supply chains, is essentially what's their role in guaranteeing or providing finance to drive up standards within supply chains, and also ensuring that SMEs at the bottom of those supply chains, particularly in the agricultural sector, can create high-quality jobs. And I think that's a discussion that needs to be had. So we need to move away from this idea of supply chain sustainability as risk mitigation towards essentially a collaborative approach, and financing has to be in that. So those are three areas where I think there needs to be real focus. I just want to congratulate the ITC for the tremendous work they do on the ground, but also the work they're doing to put the SME lens on the SDGs. And we look forward to working with you in the future. Thank you.
Thank you very much, Andrew. There's nothing left for me to say on that. Thank you very much for your participation and for continuing this debate. As Marion mentioned, 27th of June is MSME Day. We'll be doing something here at the UN with our partners, Argentina, ICSB, ICC and others. And we look forward to continuing this discussion over coffee and croissants outside. Thank you.